Hello and great welcome. So now, after having completed question number 1.11, we will pick up question number 1.12, and this question states that F1 Company of Delhi has a branch at Jaipur and goods are invoiced to the branch at cost plus 25%. Now, as far as rates are concerned, that should not pose you any difficulty. As far as this particular question is concerned, rate is on cost. So you are going to presume cost as 100. Your margin will be 25, and I need not require to tell you that your invoice price will be equal to 125, isn't it or not? Then further here it is written that the branch is instructed to sell the goods. Branch is instructed to deposit the receipts every day in the head office with the bank, and then this is a normal what we call routine work, that whatever branch is going to collect the cash, that cash need to be deposited in the head office account. Further it is mentioned all the expenses are paid through check by the head office except petty cash expenses which are paid by branch. Now in this question it is stated that all the expenses of the branch are met by head office. That means head office is going to send cash. However, petty expenses will be met by branch. From the following information, you are required to prepare the branch account in the books of the head office. This is also mentioned in this particular question. And now 1,64,000 opening stock is given to us. So opening stock, even though here it is written invoice price, so you are going to write on the debit side of the branch and of course loading on the credit side. Now you know the treatment of closing stock also. Opening and closing debtors are given. You know the treatment of this also. Opening balance of furniture and fixtures this time are also given, and then cash sales, and then credit sales, and then we have goods invoiced to branch by the head office. Correct? Expenses paid by head office is 2,64,000. Now in this question actually there are petty expenses paid by branch. Now petty expenses have been paid by branch. Now in this question you must have noticed there is no opening balance of petty cash. There is no opening balance of petty cash. Moreover, we did not send any petty cash. So how the branch manager is going to meet the petty expenses? Obviously this time the branch will have to pay these expenses out of their own pocket, because we are not having opening balance of the petty cash. Neither in this particular case the petty cash has been sent by head office. So how the petty expenses will be met? Obviously it will be met by the branch of its own. Now what branch is going to do later on, because in this case opening and closing balance of petty cash is not there. So later on when I am going to write remittances, correct, cash sales and cash receipt from debtors, from there on I will subtract these petty expenses. I will presume that petty expenses have been paid by branch out of total collections, and whatever remaining collections will be there we will send to head office. Is it clear to you or not? Because in this question opening and closing balances are not given. So this time what you are going to do, you are simply going to subtract the petty expenses from the what we call total collections. Is it clear? Another important point is furniture acquired by the branch on 1/10/2028. Now one furniture has been acquired by branch. However, payment was made by the branch from the cash sales and collection from the debtors. So in this case again from the remittances I will subtract what we call amount of furniture, because it is stated in the question that furniture has been purchased by branch and the payment has been out of what we call total collections. So we will subtract this amount also from what we call remittances. Number one. Number two, later on when I am going to write the closing balance of furniture, because in this case we are already having furniture in the beginning to the extent of 46,800, and on 1/10/2028, that means exactly in the mid of the current accounting year, 1/10/2028, we have purchased 5,000 worth of furniture. Our accounting year will come to end on 31st/3/2028. So when we are going to write the closing balance of the furniture, first of all I am going to write opening balance, then I am going to write the furniture which we have purchased, and then I will have to provide the depreciation, because here in this particular question depreciation need to be given on furniture at the rate of 10%. So on 46,800 we are going to provide depreciation for full year, that is 4680. And on 5,000 I will have to provide depreciation for 6 months. So if I am going to provide depreciation at the rate of 10% for 6 months, it will be equal to 250. That means the total depreciation will be equal to 4680 plus 250. That is equal to something 4390. So 4930, sorry. So total depreciation will be equal to 4930. So closing balance of furniture will be 46,800 plus 5,000 minus what we call total depreciation. So this is the question as far as, and I think actually you should be in a position to manage this question of your own, isn't it or not? You should be in a position to do this question of your own, but it's still okay, I will do it for you. So in this particular question, this is your 1.12. So in 1.12, as far as rates are concerned, very clear, and so often we have done now, cost price margin is equal to invoice price. Now rate is given on what we call cost, so you will consider cost as 100 and margin will be 25 and invoice price will be equal to 125, and 25 by 125, that is equal to 1 by 5, will be your rate of loading on invoice price, correct? Then obviously you will have to prepare the branch account, in this particular case, branch account. Now when we are going to prepare the branch account, pretty long branch account, I will pick the what we call sheet of the question. This is 1.12. The first information is opening stock, so I am going to write opening balances. Under the opening balance, I will be writing what we call opening stock, and opening stock is given to us as 1,64,000. 1,64,000. And on the opposite side, I will write here load on. You can write stock reserve also. I will write opening stock 1,64,000, and rate of loading we just computed is equal to 1,64,000 into 1 by 5, that is equal to 32,800. So 32,800 will be your loading. Then we are being given closing stock. So balance carried down, I will write somewhere here, balance carried down. As far as balance carried down is concerned of stock, it is given to you as 1,92,000. 1,92,000. So 1,92,000, first of all, I am going to write it over here. And then later on, of course, I will have to do the loading. So I will write here load on closing stock. I can also write stock reserve. So closing stock is load on closing stock 1,92,000. 1,92,000 into, and rate of loading we computed actually was 1 by 5, isn't it or not? And this will be equal to 38,400, I think so. So 38,400 will be your amount of loading. After this, the next information is opening debtors. So first of all, you are going to write debtors over here, that is equal to 63,400. And closing debtors are also given to you, so you are going to write closing debtors. Amount of closing debtors is equal to 84,300. 84,300. Obviously, I will have to prepare branch debtors account. So this is your branch debtors account. And in the branch debtors account, I need to write opening and closing balances. So opening balance is 63,400. So I will write here 63,400 and closing balance 84,300. These are the formalities which we need to carry out. 84,300 is our closing balance. Now in this particular question, we are also being given that this branch is also having furniture and fixtures, and that is equal to 46,800. And remember one thing, Furniture is not good, so no question of any loading. Furniture is an asset. Then we are being given actually cash sales. So in this question, just allow me a second. I will write this loading over here. Load on opening stock 1,64,000 into 1 by 5, 32,800, and I will rub it out. Why I am doing so? Because I need a bit of space under remittances. Correct? So now I will write here remittances. And under remittances, obviously, I am going to write cash sales. An amount of cash sales, as we saw just a moment ago, 8,02,600. Cash sales is equal to 8,02,600. After that, we are being given credit sales. So credit sales will be written on the debit side of the branch debtors account. So we shall write here credit sales. Amount of credit sales is 7,44,200. So 7,44,200 you are going to write here, correct? And then it is given in the question, goods invoiced to branch by head office. So goods invoiced to branch by the head office, you are going to write here goods sent to branch account. 12,56,000 worth of goods have been sent by the head office at an invoice price, obviously. Now I am going to write loading on goods sent to branch account. Goods sent to branch account. 12,56,000 into 1 by 5. That will be equal to 2,51,200. This will be the loading, correct? And now the next one is actually given to us expenses paid by head office. So we shall write here to cash expenses, amount of expenses 2,64,000. Then it is given in the question petty expenses paid by the branch 20,900. Normally, in order to reflect the petty expenses, what we do under the closing balance, we write petty cash, we write opening balance, then we add cash sent, and then we subtract the petty expenses. But problem is that in this case, we do not have opening balance. We do not have, neither it is given that cash has been sent by the head office for petty expenses. So this time branch manager is meeting the petty expenses of its own. So what he will do, he will subtract that amount from the total collections. Cash sales and cash from debtors. Cash from debtors, so far it is not given. Anyway, whatever total collection will be there, I will subtract from there on petty expenses. So this time you are going to subtract the petty expenses from the total collection 20,900. Another point in this particular question, as I explained earlier, that one furniture has been purchased by branch, correct? And they have subtracted, the payment was made by branch from cash sales and collection from debtors. So payment has been made out of remittances, indirectly it means. So less furniture purchased, and furniture purchase given to you is 5,000. So you are going to subtract these two items from the total collections. And then we are going to write here furniture and fixture. As I told you, furniture and fixture in the beginning, we are being given furniture in the beginning is 46,800. So I'm going to write here 46,800. And then I will write, then I am going to add furniture purchased. Furniture purchased happens to be 5,000. So total furniture is equal to 51,800. And I told you earlier, less depreciation. We computed total depreciation on 46,800 at the rate of 10%, 4680, and on 5,000 at the rate of 10% for 6 months, which is 250. So 4680 plus 250, total depreciation was 4930. So 4930 worth of depreciation you are going to subtract, and in the outer column you are going to write 46,870. 46,870. Is it clear to you or not? So 46,870, this is how you are supposed to do this particular question. But before you tally it off, first of all, you need to tally your debtors account to know the amount which you have collected from debtors. So cash received from debtors will be your balancing figure. So 7,23,300 will be your balancing figure, which you are going to write over here. And then this figure you are going to write over here, 7,23,300. And from the total remittances, you will subtract, as I told you, 20,900 and 5,000. Then the net figure, and interestingly, your net figure will be 15 lakh, exactly 15 lakhs. So net remittances will be 15 lakhs. Is it clear to you? And now you are in a position to tally of this particular question. To get your final answer will be net profit. Of course, net profit, but what will be the amount of net profit? 570. This will be your net profit, correct? But you must check before you close it down. So this is how you are supposed to do this particular question. So now, as far as invoicing is concerned, it should be absolutely clear. Now, under data system, there is yet another topic. Still data system is going on, and this topic is related to local purchases by the branch. If you remember, when I started off this topic of data system, and in fact when I talked about dependent branches, I told you branches are completely dependent upon the head office. And then I explained the meaning of the dependence, and I told you dependence here suggests that all the major decisions are in the hands of the head office, and all the goods which are needed by the branch will be sent by the head office. All the expenses will be sent or met by what we call head office. Directly or indirectly, it means branch is not allowed to make what we call purchases of its own. But now here the topic is local purchases by branch. It means here head office is giving some leeway. Some leeway means some freedom to the branch, that it, in case if it requires some more goods, it can locally purchase those goods. That means here the branch is given a sort of freedom, you can say, that they can what we call purchase or procure the goods from what we call local market. However, what you need to understand is that whatever goods will be procured locally by the branch, though the payment for those goods will be made by the head office, even though branch is procuring those goods, but the payment will be made by the head office. This is the point which you need to know. Is it clear to you? So nothing else in this question, but still I will do it for you. Here it is written, Buckingham Brothers Bombay have a branch at Nagpur, and they send goods at cost to the branch. That means this question is not of invoice price. It is not an invoice price question, because here it is written goods are being sent at cost. However, direct purchases are made by the branch, for which payments are made at the head office. So in this question, branch is doing some direct purchases also. However, the payment, it is written in the question, even though if it is not written, still we are going to presume that the payment for the same will be made by the head office. Further, it is written all the daily collections are transferred from the branch to the head office, obviously. And then from the following information, we are supposed to prepare the Nagpur branch account in the books of the head office by the debtors method. So these are the information which is given to you. In this information, as you can see, you are being given impressed cash. Impressed cash here stands for petty cash. These are the opening balances, sundry debtors. And even this is opening balance of stock. Now kindly pay attention. Here it is written stock transferred from head office. That means this is the opening stock out of those goods which must have been transferred by head office. And this is also what we call opening stock, direct purchases. So opening stock of direct purchases, all these items are opening balances. First of all, you need to understand there are three items: impressed cash, sundry debtor, and stock. Under stock, it is written that some opening stock relates to goods transferred from head office, and some opening stock is from direct purchases. From direct purchases means last year branch might have purchased some goods locally, and out of those goods, some goods are still in the stock. Is it clear to you or not? Then we are being given cash sales, and then we are being given credit sales, and here it is given direct purchases. So all you will have to do on the debit side of the branch account, you will simply write to cash and in bracket you are going to write direct purchase. This is the only treatment of direct purchase. A direct purchases means goods purchased by branch. Is it clear to you? Because payment will be made by the head office. Now returns from customer, as you know, it is put on the credit side of debtors account. Goods sent to branch account. So this time we are sending the goods of course at cost price. Then transfer from head office for petty cash expenses. So head office has sent 4,000 rupees to meet petty expenses. We are going to put it on the debit side. Bad debts will be written on the credit side of the debtors account. Even discount will be written on the credit side. Now here it is written remittances to head office received by the head office. Here in this particular question, it is given that remittances, that means branch office, remittances to head office means branch must have remitted this much of amount. However, in this particular question, it is given in this manner that whatever amount which has been actually remitted by branch, out of those remittances, it is written received by head office. That means 1,65,000 worth of amount has been received by the head office. However, later on it is written again remittances to head office, and here it is written not received by head office. For example, branch might have sent a check, correct, or might have sent 2-3 checks. So some checks might have been received by the what we call head office, and some of them might not yet have been received. So that is why it is written remittances to head office not received by the head office so far 5,000. So some remittances haven't yet been received, not received. But the point here you need to understand is total remittances will be considered as 1,70,000. Total remittances will be 1,70,000 because branch has already remitted 1,70,000. That's a different matter. That head office has so far received only 1,65,000 and they are yet to receive 5,000. That's a different matter. Point is that amount which has been remitted by branch is actually 1,70,000. Another important point is because now we know the amount of remittances, and we know that remittances comprises of what we call cash sales and cash from debtors. Cash sales and cash from debtors. Cash sales and cash from debtors. Remittances comprises of cash sales and cash from debtors. And somewhere it was given cash sales. Here it is given. Cash sales was 45,000. So if your cash sales is 45,000, that means out of 1,70,000, your cash sales is 45. It means your cash from debtors must be equal to 1,25,000. So your cash receipt from debtors is equal to 1,25,000. Is it clear to you or not? Also here it is given branch expenses directly paid by head office. Indirectly you will write on the debit side of the branch account to cash in bracket expenses. Then closing balance of stock is given. Now some of the stock is from direct purchases and some of the stock is from goods which have been transferred by head office. So you can write it. Then debtors closing balance is not given. You will have to find out. Impressed cash, that means petty cash closing balance is not given. You will have to find out. And then petty expenses are also given in the question. So this is the question before you, and you should be in a position to actually do this question of your own, to be very honest with you. But anyway, first of all, this question is not of invoice price, correct? So here goods are being sent by the head office to the branch at cost. So I will write here branch account first of all. Branch account. Branch account. Is it clear to you? You will write here branch account and then this is your branch account. Obviously you are going to prepare your branch debtors account also, so I will prepare branch debtors too. Branch debtors account. First of all, let me pick the question sheet. Here it is 1.13, isn't it? Right, 1.13. So Buckingham Brothers. First information is with respect to opening balances. So first of all, I will be writing here balances brought down. Balances brought down. This is 1.13. Under the opening balance, first of all, I will be writing here impressed cash, and I have already told you impressed cash is nothing but your petty cash actually, and impressed cash which is given to you is 2000. Further, we are being given opening balance of debtors, so I will be writing here debtors, and debtors is equal to 25,000, so you are going to write here 25,000. Because we are preparing debtors account, so we shall also write it over here, debtors, that is equal to 25,000. Now, the opening balance of stock is given. First of all, let me write here stock. Now, opening balance of stock comprises of sum of the stock which has remained with the branch that transferred from head office. Transferred from head office means last year head office must have sent some goods to branch, correct? And some portion of those goods have remained unsold. So that is why this is opening stock of those goods which have been transferred by head office. So that is 24,000. Similarly, last year branch might have done some direct purchases, and out of that some goods have remained what we call unsold last year. So this is opening stock of direct purchases. Direct purchases. Direct purchases is equal to 16,000. Then we are being given here cash sales. So on the opposite side, I will write here remittances. And under the remittances, we will write here cash sales. An amount of cash sales is equal to 45,000, as you know. And earlier I told you our total remittances is equal to 1,70,000. And by subtracting 45,000 from what we call 170, we concluded that cash from debtors must be equal to 1,25,000. So cash from debtors shall also be put over here. That is 1,25,000. Cash from debtors is equal to 1,25,000. Is it clear to you or not? Right, sir. And because we are preparing debtors account, I will be writing here by cash receipt from debtors 1,25,000. Besides that, we are being given credit sales, and credit sales after cash sales are given, then you are going to write here credit sales, that is 1,30,000. Then after credit sales in the question, it is given direct purchases. I just told you direct purchases means this time branch is purchasing the goods from the local market, but this amount ultimately will be paid by the head office, so you are going to write here to cash, and here you are going to write direct purchases. So direct purchases in this particular case is 45,000. So you are going to write 45. Then returns from customer. Returns from customer will be put on the credit side of the debtors account. So returns from customer, you can directly write sales returns, that is equal to 3,000. Goods sent to branch from head office. So we are going to write here goods sent to branch from head office 60,000. 60,000. Transfer from head office for petty expenses. Again, we are going to write it on the debit side to cash. That means head office has sent some additional petty cash to branch 4,000. On the opposite side, bad debts are written. Now bad debts will be put on the credit side of the debtors account. So by bad debts, you are going to write here 1,000. Clear? Then discount to customer, I need not require to tell you where I should write it. So discount will be written here 2,000. Then regarding remittances, I have already explained the point. Remittances to head office 165, received 165, not received 5,000. So in your working, you will show that total remittances is equal to 170, and out of which cash sales are 45 and cash from debtors is equal to 125. Now we are being given branch expenses directly paid by head office. So you are going to write here to cash, and then you are going to write here branch expenses. Branch expenses is equal to 10,000, so you are going to write here 10,000. Now we are being given closing balances. So as far as closing balances are concerned, balances carried down. First of all, we shall write. Under it, I will write the balance of stock. Now, as far as balance of stock is concerned, transferred from head office. So whatever goods which have been transferred by head office in the current year, out of those goods, some goods have remained unsold. It means actually, so it is equal to 10,000. So I will write here 10,000. And similarly, out of direct purchases, some goods must have remained unsold. So direct purchases, actually direct purchases is 10,000. And closing stock of goods which have been transferred by head office is actually 15,000. Then debtors balance we need to find out. We will find it out. Then we are being given impressed cash. So impressed cash. We need to find out the closing balance of impressed cash. We can do so very easily. Opening balance of impressed cash is equal to 2,000. And it is given in the question that head office has sent 4,000 additional petty cash. So total impressed cash or petty cash is 6,000. And out of that, last item is given to you as petty expenses. So out of 6,000, 4,000 have been spent. So that means closing balance of impressed cash is also 2,000. Now in order to find out the balance of the debtors, closing balance of the debtors, correct? So 1,55,000 is the total. From 1,55,000 you are going to subtract 128, 129, 131. So your closing balance will be equal to 24,000. So closing balance of debtors will be equal to 24,000 in this particular case. Now 24,000, right? So balance of debtor, you are going to write here 24. This question is not of invoicing, but here some extra points were there regarding local purchases as we have seen. So net profit now you will compute, and net profit will be equal to 15,000. This is how you are going to do this particular question. After having done this particular question, we have almost come to the end of the data system now. We have come to the end of the data system. And the next question is absolutely similar to the one which we just did a moment ago. This question is almost ditto copy. Some internet lag is there. Just wait. Right. So again, this question 1.14 is of local purchases. Sometime when internet create problems, no? 1.14 is similar to the question which we just did a moment ago. Here it is written stock of a company, head office of a company invoices goods to its branch X at cost plus 20%. First of all, you are going to, in this particular case, it is a question related to invoice price, no doubt about that. So you can compute the rates by yourself. Your cost price will be equal to 100. Your margin will be equal to 20. And your invoice price will be equal to 120. And your rate of loading on invoice price will be 20 by 120. That is equal to 1 by 6. Is it clear to you or not? Now in this particular question, the rest of the things are absolutely similar to the one which we did just a moment ago. For example, here it is written impressed cash in the beginning. So impressed cash in the beginning, simply you are going to write it on the debit side of the branch account. Impressed cash at the end is already given. So closing balance is already given of petty cash. Now when you are going to prepare your debtors account, when you will prepare your debtors account later on, correct? I'm giving you simply hints in this particular question. Now opening balance of debtors, obviously you are going to write 25,000. So you will write here 25,000. Correct? Now here in this particular question, the difference between the last one and this one is only this much. Stock in the beginning, because in the last question, invoicing was not there, but in this question there is invoicing. So when you will write the opening stock, and especially of the goods transferred from head office, when you will write 24,000 on the debit side, on the opposite side you will also write the loading amount. Are you getting my point or not? Because this is opening stock of the goods which have been transferred by head office, and head office sends the goods at invoice price. So you will take 1/6 of 24,000, whatever it is, that is 4,000. So 4,000 loading will also be done. However, with respect to direct purchases made by branch, this is opening stock, you will simply write it as 16,000 and no loading is required. In this case, no loading is required because these goods have been purchased by branch. Are you getting my point or not? So no question of loading in these goods. Is it clear? Then cash sales are given. Cash sales under remittances, you are going to write 45. Credit sales, you will write what we call over here. As I just told you, credit sales will be written under debtors, that is equal to 1,30,000. It will be written under debtors only. And then it is given direct purchases. So as far as direct purchases are concerned, I've already told you, simply you are going to write to bank. In bracket you will write direct purchases on the debit side of the branch account, that is 45,000. Goods returned by customer 3,000. Goods returned by customer, that is sales return, that is equal to 3,000. I will write it over here. Then goods sent to branch at invoice price is given, because this time it is at invoice price. So you are going to write on the debit side, and also you are going to write loading amount. Loading amount is 1/6, so 10,000 will be your loading. Loading 10,000 you must not forget to write. Then goods sent to branch from head office at invoice price. After that it is written cash transferred from head office to branch for petty expenses. So on the debit side of the branch account you will simply write to cash. In bracket you will write petty expenses, that is 2,500. Then bad debts are given. Bad debts, obviously, as I've already told you, will be written on the credit side of the debtors account, that is equal to 1,000. Then besides that, even discount will be written over here. Discount amount is actually 2,000. Discount. Then it is given cash receipt from customer. Now in this question, cash from customer is given, so you are going to write by cash 1,25,000, and also under the remittances. Branch expenses 30,000, you are simply going to write to cash. In bracket you will write branch expenses. Then stock at the end are given. So when you are going to write closing stock on the credit side of the branch stock account, you will do the loading for this also, and your loading amount will be 1/6, that is 3,000. And you will write 3,000 on the debit side. And then direct purchases, no loading is required. Is it clear to you? So this is how you are going to do the question, and by preparing the branch account you can get the closing balance. Actually I have given it in a solved manner. You can go through this solution, correct? This question is absolutely on the similar lines as I told you. So with that we come to the end of the data system. As far as data system is concerned, it has been comprehensively well and truly very comprehensively we have covered it. Obviously now we'll move into the next part, and that part is stock and data system. We will see when we will pick up stock and data system that this system again is part of dependent branches, but this system is generally adopted by organizations having large number of transactions. Of course, it is not a full-fledged double entry accounting system, but this system is wider in comparison to data system. How it is wider and how it is better system, that we'll talk about in the next session. So till then, it's time to say goodbye.